All right, folks, time to talk about part 3 from chapter 1. All right, where's it part 2? No, I don't remember. No, it's part 2. Sorry about that. Anyway, so now we're going to talk about some of these different items that are on financial statements. So if you take a look here, this one, notice the term assets right here. Okay. Again, remember, you got to know these terms. Assets are resources the company controls and expects to benefit from in the future. Now, most folks tend to know some of these. I mean, like if you ask somebody what's an asset to you, right? Cash, supplies, furniture, equipment. Okay. So again, got to know, absolutely got to know the the terminology. Otherwise, you won't be able to answer questions. Okay. So assets. Assets are on the balance sheet. They're part of the accounting equation. Okay. Next one is liabilities. Okay. So liability, if somebody says, so a liability is when you owe somebody something, and it's typically money. Not always, but usually. So notice, measurable amounts that the company expects to give up. What that means is they're paying somebody, okay? All right? Notice it says to creditors, okay? So by the way, it's usually money, usually dollars, see right here. And here's a couple of examples. Notes payable, accounts payable. So notice, any account that has the word payable in it, payable means you need to pay somebody. This is a note payable. This is an account payable, all right? All right, so that's a liability. Again, liabilities are on the balance sheet. They're typically an amount of money, not always money, but something that is owed, okay? Next one, stockholders' equity. Now, this one's a little different, a little bit harder for most people to get. So notice what it says here. Owner's claims to the business resources. Now, you might want to, what does that mean? Well, let me give you an example. Let's say all the people that are invested in Tesla stock, okay? Technically, when you own stock in Tesla, you actually own a small part of the company. So in some way, you have a claim to their assets. Now, this stockholders' equity basically has two components. The first one is this one, common stock. Now, what this is the money, it's the dollars made from the original purchase of stock, okay? So when a company goes public, like a few years back when Facebook went public, the amount of money that they collect from that, that's the money that's in common stock, okay? Now, the second part is retained earnings, okay? And what that is, that's what the dollars that were earned by the company, but not paid out as dividends. So basically, you would have something that looks like this. So stockholders' equity has two parts. One, common stock, and over here, retained earnings, okay? Two different parts to stockholders' equity. And remember, stockholders' equity is part of the accounting equation. Assets equal liabilities plus stockholders' equity, okay? So this is right there. Okay, so there's two parts to it, okay? All right, some more terms here that you absolutely positively have to know. Revenues, expenses, and net income, okay? Now the income statement, revenues minus expenses equal net income. So for example, let's say you made $100. That's the money you took in, your sales, revenues. By the way, sometimes they call it different things, but it's sales. Minus the expenses, all the expenditures, the 70 here, gives you your net income of 30. Okay, so basically, an income statement talks about revenues, expenses, and then either net income or loss. And it's what oftentimes people will call a profit and loss statement. Okay, all right. So sometimes they'll call it a P&L. And notice, revenues, sales of goods and services to customers, and then expenses, the cost of doing business. So when you go into McDonald's and you buy the Big Mac meal, right? And they sell it to you for $8, right? Well, you give them $8. That's the revenue. Now remember, what do they got to take from that revenue? What are the expenses? Well, the hamburger, the bun, the pickle, the French fries, the soda, the cups, the napkins, the electric, all those things have to come from that. And then what's left is the net income. Okay? Again, terms you absolutely need to know. Okay, so here we go. This is chapter 1, question 3. It says, what would you call a building owned by a company? Okay, so remember, take that sheet of paper. This is question number 3. What would you call a building? Okay, what would you call a building owned by a company? All right, okay. All right, next thing we're going to talk about, again, this is one that most people probably wouldn't know, right? They've heard of it, but they don't know what it means. A dividend, okay? It says here, dividends are distribution of a company's earning to its stockholders as a return on their investment. Here's what it means. When a company makes money, so take a look here. Company, in this one, we have revenues of 100 minus expenses of 70 gives us 30. Now the question is, what do we do with that money, right? So you could do two things with it. You can either keep it as part of retained earnings, or you could give part of it out in form of dividends. So for example, dividends are when you give out part of the profit. So let's say in this case, we made $30. We decided to give out $5 in dividends. Then our retained earnings would be $25. Our retained earnings would increase by $25, okay? And it's exactly what it sounds like. It's the amount of money that we retained in the company because we didn't pay it as dividends. Now, again, technically speaking, that money belongs to the shareholders. So when a company makes a lot of money, right, you got to remember who owns the company. The shareholders own the company. So it's not really the company's money, it's the shareholders' money. Now the CEO and the CFO, their job is, the CEO is to run the company well, and the CFO is, his or her job is to, okay, we got this money, what do we do? Like sometimes they keep the money so they could buy another business or so they could expand business. By the way, Apple did this for years. Apple didn't pay dividends. And you're like, well, why wouldn't they pay dividends? Well, they took that money and they reinvested it. Because you got to remember, Apple's all driven on technology. If they don't have new technology, new products, they die. Okay? So there you go, dividends, another term. Okay? And notice, dividends are not an expense. This is a common mistake by students. They're not an expense. They don't come out of the revenues, they come out of the earnings after net income. Okay? So here you go, folks. Question number 4. Dividends are, what are dividends? Are they a type of mistake, whatever? Again, don't forget, write this down because at the end, you're going to go in and put your answers in on Canvas. All right. Next part here, the financial statements. Now, I'm just going to tell you, so we're going to take a look. By the way, these are the financial statements, the income statement. We mentioned that. Remember, that's one like profit and loss. We haven't mentioned this one yet. I'll come back to it. We mentioned the balance sheet. That's the one, assets equal liability plus stockholders' equity. And this one, the income statement, this is revenue minus expenses equal net income. Now we're going to talk about 2 more, the statement of retained earnings. So what's that going to be about? Remember, we just talked about retained earnings. This is going to tell us what happens with them in the statement of cash flows. So they're done in this order, okay? And we're going to come back here and we're going to discuss each and every one of them. All right, folks, that's part 2 from chapter 1. We'll be back with more in just a moment.